Welcome everybody to Wall Street Reporter's next Super Stock live stream, where we bring you those stocks which have that 10x to 100x upside potential. Companies going after massive multi-billion-dollar market opportunities that are at a key inflection point and with multiple catalysts in place. And we have with us today our next Super Stock debut. This is the debut live stream, Wellgistics, WGRX. It's already this thing is basically doubled since launch yesterday. A lot of volume, a lot of eyes on the stock, and I mean, it looks to me like we're just getting started. But here to find out, we're gonna hear directly from the CEO, Brian Norton. Brian, welcome to the program.
Thank you, Jack. It's good to be here,
Brian. So I want to ask you about, again, Wellgistics is relatively new to the market. The company had an IPO about 6 months ago. And I think the opportunity for investors, quite frankly, is, it's what we call a fallen angel. It was a busted IPO. Right now, the stock is on sale. Basically, you're getting it at 75% discount to the IPO. It's kind of like buying a brand new Mercedes, 75% off. So this is an incredible opportunity for investors. The stock is already exploding. But here's the thing. Wellgistics, basically, what I find very compelling, and I want you to tell our audience the details, but it seems to me that, before the interview, I did a little bit of research, but it looks to me like you're basically transforming. You're a disruptor in this, $600 billion pharma distribution market. I had no idea it's huge market opportunity. So tell us about exactly what does Wellgistics do? What's the business model?
Sure. Yeah. And it's actually a little bit higher than that. It's now, we're going to approach the $1 trillion space here soon enough. In this, it's about $800 billion space that we're operating in right now. But you're absolutely right. We're at a very pivotal, disruptive moment in I think in the United States history of time when it comes to pharmaceutical drugs. Never before has the U.S. experienced the highest pricing that in the world for pharmaceutical drugs, and where really what has happened is that the major disruption that we provide and that we step into is that the solution for the problem that big pharma is encountering today, is directly, on our shoulders to provide, and we have provided it. We are actually executing on what we believe to be one of the few and one of the only solutions to lowering drug prices in America. And I can explain how that works and why that happened, or what's happened up to this point. As we can see, in May, Trump announced the executive order for the most favored nations, which ultimately says, hey, pharma, get your pricing down. You've got to get it down. And just recently, a few weeks ago, 17 major manufacturers received letters saying, what are you doing and how are you getting it done? So all these manufacturers are actually in a bit of a scramble mode to try and figure out, how do we get price down? One of the major reasons the price in the US is so high, and you can go to another country and get the same exact drug for half, a third the price, is not because of big pharma as much as it's because of big PBM, okay? So the middleman, you might have heard this in the marketplace, the middleman gets in the way and takes an enormous amount of money in the form of what's called rebates from the manufacturers. And they do that because they're the ones that are covering the drug and reimbursing the pharmacy. So when you go to the pharmacy and you get your drug, that whole amount that the pharmacy makes is dependent on the drug being covered and how much they get paid by the guys who are covering it. Okay, it's called the Pharmacy Benefit Manager, or the PBM. Well, lately what's happening is all of these big pharma groups are saying, how can we avoid having to pay the middleman, pay the piper, right? And the way that they have come up with, and I'll link this to us, and I'll show you how this all connects. The way that they've basically come up with as a solution is to go direct to the consumer, okay? And everybody can see this happening with Ozempic and with Eli Lilly on their Zepbound product. So basically the GLP-1, weight loss and diabetic medications, both the two major players, Eli Lilly and Novo Nordisk, have both decided to take the drug direct to the patient through what's called a D2C, or a direct to patient platform, direct-to-consumer platform. So this has opened up a whole new wave of all the other manufacturers saying, well, how can we take the drug direct to the consumer? Okay. The problem is that manufacturers make drugs. They don't know how to move the drug. Okay. This is the entire logistics, life sciences, warehousing, 3PL, cold chain. The whole thing is extremely cumbersome for a manufacturer to try and figure out how to do. So they have to go to somebody who does do that. We are the delivery of the drug. That's what we do. And we don't just do it in distribution where we just buy the drug and we sell the drug. That's what I did for the longest time. I have 12 years of history doing that alone. What Wellgistics Health is we've brought the distribution together with all of the tech and hub services. So it's now the prescription routing. A doctor writes it. He has to send that drug prescription to a pharmacy. The pharmacy has to fulfill it for the patient, help them with their managed care, and the patient is happy. Okay. So we built in the full tech and hub routing platforms. So all the non-physical movement of a drug, right? This is the script. And then we linked also a physical pharmacy. We're licensed in 49 states. We're trying to get California finalized. But between our hub and tech, our distribution, and our pharmacy, we now have all the major components to route that drug in a faster, cheaper, simpler way to the patient. And we provide that solution to the manufacturers.
Okay. So this is okay. So basically, you Wellgistics, what's impressive is this. So you're doing roughly, I think, last quarter you did 18 million in revenues.
We are at about 19 million so far this year. So both quarters combined, we're at about 19 million.
Okay. Mm-hmm. And so you're generating some substantial revenues. I mean, the revenues are growing at a fast clip, and it looks like you're in the space where you have a lot of tailwinds. You're in the right place at the right time. Like all the stars are aligned. You have this trend towards DTC. You have the Trump administration that's pushing this. Like everything is all the kind of the winds are blowing in your favor. Here's a question. So essentially, in a nutshell, if you had to explain it, the business model, exactly what you do to generate those revenues, like the business model is exactly what. So in layman's terms,
sure,
in 10 words or less.
Yeah, we are the direct rails or the delivery system for a drug to move from the maker to the taker.
Okay.
That's what we do. We help move the drug from maker, drug manufacturer, all the way to the taker, which is the consumer. We have a closed ecosystem to make that happen. We don't depend on anyone else. And if anybody understands pharma, there's a dozen different players that typically get involved and take their piece of the pie, which just keeps encumbering the price of a drug. We reduce all of the noise. We provide an end-to-end solution, fully vertically integrated for a pharmaceutical drug to move from the beginning to the end. We do it faster, we do it cheaper, and we do it in a way that's more compliant across the entire system.
So the benefit, in other words, what you're delivering is essentially lower costs. That's kind of the bottom line. Is that right?
Yep. Lower cost to all parties, all stakeholders. So it's a better profitability for the manufacturer, okay, because that's what they're looking for. It's a better profitability for the pharmacy who's dispensing the drug and doing the real heavy lift, right? Community pharmacies. And it's a better, which ultimately is translated as well to a better cost to the consumer or to the consumer's insurance, which can is most of the time the employer group, who's also very much affected by this. So the employer groups step in and win from our platform as well. Okay.
So no, very interesting. Now, I guess the question is, so how you're doing 18 million. What was the start? Give us like a snapshot of the company history so people can get an idea of, what the growth trajectory has been till now.
Yeah. So I've been about 12 years in the business of distribution. That's my specialty. Wellgistics, was just plain Wellgistics was my company for since I acquired it from another company back in 2017. So since then, I've been in pharmaceutical wholesale distribution. We have a 50,000 square foot facility in Lakeland, Florida, where we currently move all of the drugs into the distribution facility and we send it out to our independent pharmacies. And we have one of the largest cold chain facilities in Florida. We have full 50 state licensure, FDA, all the compliance imaginable, all the certifications imaginable, in all 50 states, both for distribution and 3PL. So that's my specialty. That's where I come from. That's my world, selling drugs to independent retail pharmacies. Where everything changed was when the market shifted and we started to see that a better end-to-end solution was required. That's when beginning of last year, we decided it was time to do a roll-up M&A platform. So my company was rolled up into the Tech and Hub, okay? And that was rolled into the pharmacy to create the fully closed loop, the closed ecosystem platform. I saw very much the writing on the wall that was coming, where manufacturers were going to be pressured. And here we are today. This is happening. This is real time happening. You can read all about it in the press, where pharma is looking for better solutions. The problem, though, is that very few people had the foresight to build the entire end-to-end capability. We did. We are at a really, really important moment where we're one of very few that can provide that full solution to the manufacturers to drive the drug and help them get their product to the patient better. So that's where we're at an inflection point ultimately, Jack, is that with our AI-powered technology, which, by the way, has a significantly higher multiple through our platforms that offer subscription services, offer SaaS-based models to all aspects of the industry in the hub services. So we can service both independent retail pharmacies, we can service PBMs, we can service direct employer groups with our Tech and Hub service. So that multiple for investors to consider, that's about a 3 to 5 times higher multiple than just the multiple on a distribution model like I built. Okay, so if we were just distribution, you're going to get about a 3 to 5 times higher multiple on the technology piece. We've fully incorporated 3 major AI technology tools into our company. So that's one. I can speak to that as much as you'd like. The other side of it is there's an enormous growing demand for the consumer to receive a drug directly via platforms where the manufacturers link to telemedicine. They link to direct access programs with independent pharmacies that can service all the states. So our independent pharmacy in 49 states has the ability to pull those prescriptions in and service direct to doorstep a patient. Think of it a little bit like an Amazon model, or think of it like a Hims or a Ro.co. These guys are providing enormous volume of lifestyle meds, your hair loss, your weight loss, your erectile dysfunction meds, and they're taking those directly to the patient with telemedicine. So that platform is growing enormously in the United States. The problem is that nobody can service it. Nobody has the pharmacy, the platform, the ability to intake the prescription, process that prescription, work with the patient, manage their care on a monthly basis. We do all of that. That's something we provide. We also have a layer up where a lot of our competitors don't have their own distribution warehouse. A lot of our competitors outsource their technology to somebody else. All of it for us is in-house, okay? So think of it this way. Level 1 of revenue is the distribution, buy a product from a manufacturer, sell a product to a pharmacy, okay? We get a profit off of that. Call it about a 12 to 14%, 15% profit margin, okay? Next level is pharmacy. Our pharmacy margins are generally going to be between about 25 and 35%. So definitely much better. Then you get to the final level, which is our Tech and Hub. Those are 60 to 70+% profit margins. We have full interoperability. We bring all three of them together under one roof. So now you get the bang of all bucks. You get the best of all worlds. You get the distribution, you get the pharmacy, and you get the tech and hub all built into different revenue streams with different multiples.
So Brian, I think the takeaway for investors is really this. In other words, you're building kind of like, a next generation, pharma distribution company. So people might be familiar with, let's say, McKesson, which is like a giant multi-billion-dollar company. And I think their valuation is, I believe they trade maybe at like a 1x multiple of revenues, maybe. And you're sort of almost like at the other end of the spectrum. So almost like the Hims of the world, which I believe trades at 5 times revenues multiple right now. So you're kind of, you're both. Yeah. Oh, right.
McKesson's a wholesaler. Hims is more of a pharmacy, direct to consumer.
Yeah. So, okay, here's a question for you. So you're doing so far you've done 18 million. What's the how big, how far and how fast can you scale the revenues? In other words, like the company you said, you got AI, you said you're at the inflection point right now. Like what, where can we see, what can we see maybe over the next 6 months? What kind of numbers, what kind of run rate do you think you can hit over the next 6 to 9 months?
Yeah, of course I can't guarantee anything, and it is, I have to disclaimer that this is speculative, but my vision is to, I think we can 5 to 7 times grow next year. I think we can hit a 250 to 350 number by next year at the margins that I've shared. I think that average margin is going to be somewhere around call it between 25 and 35% on average. But to hit 250 plus million next year, in my opinion, is extremely doable. I think we can do that. Okay. I think my heavy focus is in growing our all aspects of each division, and the demand we have right now is actually very, very high. We are in deep conversations with many manufacturers. We're in conversations with basically anybody that's involved in the drug delivery platforms. They're looking for partners. They're looking for better verticals to deliver to their customers. These are very large groups that have tens of thousands of customers per month coming in the door, needing to be fulfilled, and they don't have solutions for fulfillment. Right. So we really are at a special moment where executing and continuing to operate like we have been and growing this business month over month like we are, it really is very, very achievable to hit these types of numbers, and however you want to translate that to market cap, be my guest. But I do think that's within our reach. It's something that we were going to be aiming very diligently to do. I have an incredible management team. I have about a dozen more people that are all really badly wanting on our team that are high industry titans. So there's a lot of very good momentum happening in our favor right now. And, we've had like you said, we've had a little bit of a rocky start. But we've done so much to clean up this company.
That's the opportunity. Listen, that's the opportunity for investors. That's the opportunity for the investors. Like you're. I hate to say this, but the company's misfortune is the opportunity now for the people watching now to get in at these deeply discounted prices. All the vultures out there watching. Okay, bottom line is here. The opportunity is this. So you want to hit 250, 350 million. Let's say 300 million. Okay, 300 million revenue run rate. Okay, 300 million run rate, and that would put you at roughly. Listen, if him again, the multiples. There's 2 things I think which are important. Number 1 is the velocity. That's the other thing. That's the other ingredient to getting that multiple. If you go from where you are now to these big numbers, 20 million a month, all of a sudden month over month growth, you're going to get a premium multiple because of the velocity, the speed. So the market loves that. The market loves upside surprises. So there is a path for this thing to be roughly 5x. I think it's actually conservative. I think it's a realistic number, 5x. So that would be roughly $1.5 billion valuation. Let's just say 1 billion. Okay, so billion valuation. You're trading at roughly, I don't know, what is it, 150 today, I believe. Okay, let's just say it's just to make a number. So 1.5. So that's the path for this thing to be a 10 bagger, right? So that's the path for this thing to be a 10x, and that's exactly, Brian, that's exactly what we look for. This fits the model of the 10 bagger blueprint. You know, you're at the inflection point.
Okay.
Oh yeah, Brian, come on, you're on the #1 channel here. This is why all our stocks go up. This is why we have these stocks at the bottom of the screen: 10 baggers, 20 baggers. Brian, listen, if you have anything, if this stock is not, you know, $20 a share in 12 months, I'll consider that a failure. So I just want you to understand that. If you have anything less than $20 in WGRX, you're not going to be in the pantheon of 10 baggers. Actually, $10. I think actually, we launched at $10. I think is a good start. You got to get to $10. Okay, $10 is the minimum I expect from you on this channel. So that's what the audience forget me. It's what the audience expects from you, right? We have high expectations, and now there's pressure on you to perform, and that's what. By the way, I actually talk about this. That's one of the things that makes, you know, our 10 baggers go, is because it puts the CEOs, and not everybody can handle it. I think you can. I think it puts them under pressure to perform, to deliver, to make the stock a 10x. Because listen, I always say that, you know, to get to where you are now is not easy. I mean, you've already built infrastructure. I think in your background, we talked before, you've done like $1 billion in revenues over your career in pharma sales. So I mean, you've done it. I mean, you know the business. It's ready to go. So if you're going to say, I mean, you've already have a track record, right? So if you're saying, hey, we're going to do 250, 300 million a year, okay, it's not a crazy thing. It's okay.
I've actually done it. I've done over 200 million in 1 year myself, in distribution. I didn't have nearly the momentum. I didn't have nearly the market readiness. I didn't have tech and hub. I didn't have a pharmacy. I didn't have any of that. I didn't have a public market for, you know, positive capital. I didn't have any of that. And I did over 200 million in sales in 1 year. I did that in 2019. It's very, very possible to do what we're talking about, especially with the market conditions that we're facing today, with the pressure that is coming down for lowering drug prices. And we are the solution to lowering drug prices in America.
Yeah. And by the way, Brian, so, you know, here's the thing, you know, we're very selective about the companies we bring on a platform. Like, they got to check off like literally a list of 10 criteria, and which we have right here, not to plug the book, it's on Amazon. But the point is this, you basically check off all the boxes. What you just mentioned now is one of them, which is the trends in the market. Is the company part of a theme? Is it part of a hot theme? You're part of a hot theme, and you're part of a Trump theme, right? So it's like everything. It's like, you know, it's like a fast car. It's not just it's like a fast car on top of a fast train. It's like it's like a bullet train going 200 miles an hour, and you got the Lamborghini or Bugatti going another 200 miles on top of that. So it's all going. You got it's these you know, stacks on stacks going, and it's an incredible opportunity. So I want to talk about one thing. So you did yourself 200 million as a private company just a couple of years back. 200 million a year in revenue from what kind of a start? From 0 to 200, how long did that take you to do? Like, what was the zero?
I started in just 2 years prior, not even. I started in mid-year 2017 at 0. And by 2019, closed out the year at 200, a little over 200 million.
What were you doing exactly? Like, what is this? How do you, because that's a crazy, that's like our exponential rock. What were you doing?
We were providing solutions to independent pharmacies that, again, were novel and new to the market, to help pharmacies in a different way. We were very much focused on how to assist an independent pharmacy in a more meaningful way. So we were very selective about the types of products we brought. I'm a very, very big 80-20 guy, you know, Pareto's law. And that, why have thousands of SKUs at low margins that you have to worry about, you know, all the overhead with, when you can have 25 SKUs or 50 SKUs, and those have better margins, better deliverable, you know, better unique aspects to that drug. So we were very selective, and that 80-20 model worked really well. In fact, we're applying that every day here today, here and now. where everything is about what is the highest levels of urgency and what is the highest level of importance. We focus every day on how do we centralize our core focus on the 20% that creates 80% of the results. That's every day. Every one of our meetings, you can talk to any one of my managers and our leadership team. That's what we talk about on literally a daily basis. And as I'm on more and more with you and I'm on camera, I'll be at the warehouse, showing our warehouse. I'll be at the pharmacy, showing our pharmacy. I'll be at our corporate office in Tampa, showing our corporate office. I'm at my home residence office right now, but ultimately we focus in on the greatest drivers that have the biggest results. And right now in pharma, in the United States, what we're building right here and how we're building it is fully aligned with the demand that the market has. And I'll just give you some really quick statistics. I was looking at this the other day, and in our hub services division, I'll give you a little bit of how this works. 81% of consumers think that pharma companies should offer tools that help them manage their care. Okay, 81%. 90% of those consumers have questions about their medications. 77% of the doctors would recommend a direct-to-consumer portal to their patients if it was available. 44% of the patients are lost in the first minute after they're prescribed. If they don't get effective onboarding, they're gone. These are all just hub services, just us intaking the patient with their prescription and routing that prescription through our network of pharmacies, which we have over 6,500, by the way, of independent pharmacies in all 50 states. We can route a prescription for that physician anywhere in the US. It's one of the unique aspects of our proprietary tech is that we're one of the first tech tools to be able to offer full interoperability of routing prescription drugs, fully compliant. So those are really, really big statistics where you've got 80+% of the consumers saying, where are my tools that help me with my prescription drug? And Jack, I don't know your audience very well. I'm sure it's a great audience, but most people that are listening, I don't care who you are, you have a relative, you have a mother, a grandmother, an aunt, an uncle, a friend, yourself that is affected by this. Okay. We're not doing a stock that we're selling, cool new bicycles. Okay. This is we're talking about people's healthcare here. We're talking about people's life, medications being delivered are critical for life-saving environments that people get themselves into. Okay. And there's just devastating statistics about people who don't take their medication according to their physician. And it's because they can't afford it. It's because they can't get it. It's because nobody's offering it to them on a timely basis. When they do get it, they don't know how to take it. They have confusion with it. Maybe they have side effects with it, and they don't know who to call. They don't know what to do. We have built all of that platform under one roof to be able to service the patient, to service the doctor, to service the pharmacy, to service the manufacturer, right? We build all the key stakeholders under one platform and say, we will deliver to you at a faster, better, more managed platform for you to have a better experience. And this is the resonating factor, like beyond just an investment where we're trying to make a dollar go to here. We're doing a really big service to America right now. We're providing an incredible value add to a very burdened market right now. It's unlike anything it's ever seen before. It's at an unprecedented rate of failure. Here's a number, over 35% of the people that walk into a pharmacy with a prescription, they leave the pharmacy without a drug. Over 35% of Americans, they walk out of their pharmacy without their prescription drug. The reason for that is because in a huge way, it's because the PBMs have taken that drug and not covered it. And so it's on the patient's expense. They have to go in and pay cash for it. And they're like, and the new statistics are showing that anything over around $50 has an 80% chance that they're going to walk without the drug. Okay.
Ooh,
a $50 price. So I go in and I'm struggling to make rent.
I mean, basically, you're saving people's lives. I mean, it really, essentially, Wellgistics really, not to sound like, touchy-feely and everything, but you really could be saving thousands of people's lives at the end of the day.
Yeah. As we continue to grow, as we continue to scale, as we continue to perform all of these duties and operations for all the different stakeholders, the ability to get your medication when you couldn't get it before, the ability to afford your medication when you couldn't afford it before, the ability for it to get to you faster when before it might have taken a very long time. All of that is built into what we are doing and what we will continue to build.
Yeah. So, Brian, not to plug the book again, because we gotta move some copies. But one of the big things that we look for in the 10-bagger blueprint, one of the 10 qualities is CEO quality. It's extremely important because, again, at the end of the day, when it comes to these growth stage companies, it's the CEO. You got to bet on the jockey. It's not the horse, because it's not the business, it's not the concept. It's the guy who's got a track record, who's got a vision for growth and can execute. And I have a couple things in there which we could talk about, but basically you have a track record, extremely important. You've done 200 million in revenues from 0 to 200 million in a year. So I would think, look, if you're saying that you want to hit 250 to 300 million by next year or in the next 12 months, why not? You've done it already. I mean, and you did it as a private company, as a guy, in his garage. I don't know what you were doing, but basically you did it as a private company. Now you have resources. You got a NASDAQ vehicle. It's kind of like before you were driving a bicycle. And you did it. Now you got a Lamborghini. You got a Formula One car right now, because I mean you got incredible opportunities. You could do M&A. We'll talk about all those things. It's okay. So in terms of, I think it's very important, and I think people will, as you do more of these live streams, I think people will get to know you better. They'll understand your vision for growth. But again, it's one of the things I talk about is CEO quality is important. And here's the question is. Now, is this guy a 10x CEO or is he a 100x CEO, Brian? That's what we have to find out. We don't know yet. We know probably a 10x, but are you the 100x? Because listen, and by the way, we've had some companies, guys like you, who went up not 100x, 1,000x. Axon was a company we the Taser guy. It was a $1.25 stock. Remember the Taser guy, the body cams on cops.
I do actually.
Okay, so that was he's in Scottsdale. Young guy, and I remember doing it through early 2000s. Stock was $1. Everybody, by the way, it was just like you. It was a failed IPO. It was a busted IPO from Paulson and Company. Everybody thought it was a joke. It was a scam, whatever. The usual stuff everybody says. And the market was not. Next thing you know, the stock now trades over $800 a share. I think they did split. Basically, if anybody who put $1,000 into it would have $1 million today. $1,000 would have turned into $1 million. Now, that's what we're going to find out if WGRX, if Wellgistics.
I'm assuming his market wasn't nearly $1 trillion market either, right? We're talking about
no. It was
a $1 trillion market is pharma. Okay.
Yeah, no, it was nothing. That's what. Listen. That's why I didn't buy the stock. I was an idiot. I thought tasers. That was like some goofy thing. It was a brand new thing. You actually have a giant ocean already that you can go into. But here's what I want to ask you about this, because this is the thing that which is I think going to move the needle on the stock and for the valuation. Your advantage, your competitive advantage is let's talk about it. It's the tech stack. It's the AI. Give us some details on. How you deliver alpha, so to speak, in the industry.
Yeah. So again, once again, to be able to pull all of the components into a true end-to-end vertically integrated ecosystem is not an easy feat. Okay, you really do need a tremendous amount of licensure. We're in the most compliant space in the world. Okay, so take all the compliance of being in pharma and multiply that by 10, because we're not just one pharma distribution, we're pharma pharmacy and we're pharma tech and hub. So you add all the components of that, all the licensure required, all the certifications required. Then you have all, and that's every state. Every state is different with licensure, right? So to put together what we've done is about a 3-year process for somebody. If somebody said, I'm just going to go duplicate what Wellgistics does, A, get ready to spend tens of millions of dollars, and B, get ready to spend 3 years doing it, right? It's very, very important. Up, you're muted.
My mic, you have a moat, essentially. That's the moat.
Correct.
Is this
Yeah.
3-year head start?
Yeah.
So
putting that all together gives us a huge competitive advantage in that now you have to think about, okay, now that you have that, what does that mean? Okay, you are a solution to what problem? And the problem is that all of these, not just the drug owners, not just the manufacturers of big pharma, small pharma, middle pharma, it's the PBMs have needs, right? And there's a lot of pharmacy benefit managers that are not the big bad guys. There's a ton of new ones coming out that all have thousands, millions of patients that they need to help service, but they don't have the infrastructure. They're just a guy, a whole bunch of people in an office in Scottsdale, and they're trying to service 1 million customers with all their needs. So they need direct physical abilities. They don't have those. So they have to farm those out. They have to source those out. You go to very, very large employer groups who are looking for direct platforms, but they don't want to necessarily go to the same juggernauts that they've been going to because their prices are so high. Employer groups pricing on their insurance is expected to go up again next year by, I think that it's like in the teens. Okay.
Wow.
And the reason, I just read an article about it. I posted it on my LinkedIn. My last post on LinkedIn talks all about this, that the number one reason for the price increase for employer group insurance plans is the pharmacy benefits. That's the culprit. That's what's causing the huge price increase. So I'm a big employer group, and my premiums are in the many millions increase. That this is not small numbers. So what employer groups now do is they say, who can I go to that will help me reduce my prescription costs, service all my employees, give them direct to their doorstep drugs, take care of all their managed care, and assist them with their problems? Who can do that? What I'm trying to paint the picture of is that very few companies have built it to service the incredible demand, the outrageous pent-up demand that's happening in the market for somebody to be a delivery mechanism and fully service that customer base of theirs. Okay. So we'll start to see, in my opinion, we'll start to see a huge turnaround. In the past, groups like us would go to the manufacturer and beg to get one of their big drugs so that we could take it to pharmacies and direct to consumers. I think that the narrative is going to switch. I think the big pharmas are going to come to us and beg us to take their products on and deliver them to the marketplace. I think that's
you're solving a real pain point in the market. I think that's the driver. The pain point is what you're solving and across all aspects. And again, that's people are motivated by the pain point much more than the upside. So that's very, very, very valuable. Okay, so the takeaway is this. The takeaway is this stock, there's a path for this thing to be a, potentially $1.5 billion valuation based on 250 million revenues, which would make it essentially a 10x from here. And again, if you can hit those numbers, if you can hit a 25 million a month or 20 million a month revenues by I don't know, let's say May of next year, I think you'd get that multiple. I mean, that type of velocity would get you. So here's my next question. I think what the market's going to be looking for is, okay, you got the vision, you got the track record, and what people are going to be looking for now is, okay, is this guy on track? Is it on track to hit those numbers? So in terms of what kind of milestones can we expect to see, like what kind of news flow can we expect to see over the next, let's call it, 90 days or so, which would indicate to the market, okay, that we are executing on schedule, like we're following our blueprint?
Sure. Yeah. So we do have a tremendous amount of deals in the hopper that we're working diligently to execute. Some of those are obviously very exponential if they happen. Some of those are, good, better, and best. We've got all three. Okay. And again, because of the demand in the marketplace for fulfillment, because of the demand for hub services, because of the demand for distribution and for pharmacy direct to consumer, we have a lot on the table, and we're getting more and more attention to our ability to fulfill for them. So we get a lot more requests for quoting and for onboarding new products. We have a lineup of M&A opportunities. Some of that is very heavy AI tech in the healthcare arena. Some of that is very much physical, purchasing of a physical location that is already servicing a marketplace. So those are all in the hopper. We're working on many M&A opportunities. I would anticipate we could easily have in our ability, one M&A a quarter type timeline.
Okay.
None of that is obviously guaranteed, but it's something that we see enough M&A in front of us right now that could actually be, it could even be better than that. It could be faster than that. If we can, the diligence is the hardest thing. And as you know, in a public company, diligence for M&A and PCAOB auditing and all of those things are the real culprit. They take a long time.
So you have an M&A pipeline, which I don't think the market's aware of that. So I don't think you've talked about it. I don't think it's been news.
Yeah, we don't talk much about it because so much of it is back and forth, right? And the diligence is the culprit again. So it's hard for me to project when we would, close a particular acquisition, but we do have a lot at us right now. We have a lot that we're filtering through with our teams to make sure that it aligns with our vision. It aligns with our wheelhouse of what we're really good at, making sure that it brings 1 + 1 = 10. That's what we're looking for in our M&A, right?
Yeah, the value add.
Yeah, and as far as it's been, I don't think there's too many CEOs that would probably have done what I did and stick around and fight through the fight that I fought. I'm a lion by nature. I do not give up. I do not back down. I've been trained that way from my childhood, growing up on a farm with 5 brothers. We were wrestlers, and I just was a scrapper. I ended up being a state champion wrestler. And then everything I've ever taken on since then has been all about, I don't just walk away. Once I commit to something, I'm all in. I am all in. I started with this idea one time that I was going to run an Ironman, and I did it and finished it in a matter of 4 months of training. And if anybody's looked at a full Ironman, that's not something you do. And it was one of the harder circuits. So it about killed me, but it's in my nature to fight, to not back down, to win, And so I want to do that as ethically as I and compliantly in this space as possible, and especially in the publicly traded world. It puts even more elevated need for doing it right and doing it compliant. So the first 6 months of this IPO, it's been a lot of fight. It's been 15-hour days every day. It's been, pulling together a team and motivating the team and getting all of this, in a way that sets the stage and continues to show the ongoing execution for a very, very, very exciting future. I think Q4 for us is actually going to be a really great quarter. I think traditionally in pharma, Q4 is better because most people's deductibles have been met and they're out there, using their coverage a little bit more. I don't know every reason, but Q4 is usually the big quarter and Q1 is usually a little bit of a lower quarter. But I anticipate us having a really strong Q4 and then walk into the new year with a lot of momentum, like a tremendous amount of momentum going into the new year.
We're talking about 26. We're talking about January,
yeah,
basically.
2026. Yeah, we're talking about
Okay, so
what's that? Where are we at? 4 months from now?
Yeah, so basically we're building momentum. So in other words, the big breakout will happen in January, roughly.
I think the biggest breakout is going to start in all of our momentum is going to really be pushing us to Q1 of 26. But I won't underestimate what we might be able to do in Q4 of this year too. I think we're going to have a good Q4.
Which is right now. We're in Q4 now, right?
We're about to go into it. We have one more month, right? We have a closeout of Q3, and then October starts our Q4. So we've had to do a tremendous amount of work and cleanup and getting debt off the books. You'll see all of that in Q3, a tremendous amount of debt coming off the books, just cleaning up the cap table in a lot of ways. Putting this company on a really, really strong path for exponential, unburdened growth.
Okay. Exponential growth. That's exactly, what we're looking for. I think this is what the market needs. They want to see that news flow. I think what the market needs is they want to see the news flow, the deal flow, the M&A, revenues, things like that, which is, a steady flow of those types of news announcements over the next couple of months. I think that could, really get the stock moving. I mean, we already got a momentum. The stock, there's a breakout in the stock. I mean, I'll just address the technical situation because I think it's important. I mean, we have a lot of people who follow it, but yeah, I mean, like right now, this thing can, stock is essentially, we got escape of velocity. This thing, can go to, $5. We just broke out of, a lot of key resistance levels, and all we need now is just the news flow, the fundamentals to sustain what the charts are indicating. Now, one thing I want to ask you. Okay, so we talked about the milestones. What are some of the challenges? What are the biggest challenges you face? Like, what's between, you want to hit 350 million. What are the biggest challenges you face that's in the way of getting there, like immediately? Like, what's this kind of? Is there a sticking point?
Yeah, there's only one challenge, Jack. Only one. Everything else, I'm completely and totally comfortable with. I have one challenge. And it's always going to be the same challenge. And it's just capital, just growth capital. That's all it's going to boil down to, right? So, we are in a business where if I put $1 in a machine, I can turn $1.25, $1.50 out of that machine, right? If I put $10 million into my distribution, I can turn product in 30 days at a 20% profit margin, okay? But just in distribution alone. The capital requirements are always going to be the greatest for us because it's growth capital. It's not, I need capital to pay off a bunch of debt. It's not that I need capital to go build something. It's not that I need it for CapEx. It's all been built. Everything is done. Everything's done. Now it's product. I have to buy product. If I take on a deal from a manufacturer and I'm going to service, I'm just going to throw out a number. I'm going to start servicing 100,000 patients a month for that drug. Okay. I have to be able to buy that drug times 100,000 at a price point. Let's say it's $200. Okay. If I have to buy that drug for $200, I have to be able to buy that drug for $200 times 100,000 to service that many patients. Do I have a patient service problem? No. Do I have the ability to do it? Do I have the tech and hub to route it? Do I have the pharmacy to fulfill it? Do I have the distribution? All there. But do I have the capital to take that big of a project on or not? So I really boil everything down to everything's done. I just need to make sure that we're well capitalized to be able to purchase products and to just grow the business. Okay. So I'm at a point where the more capital I get, the faster I grow. That's really what it boils down to. The more capital I get, the more my revenues grow. It's not anything else. Everything's built. It's all done. It's just making sure that we're capitalized always to be able to
fuel. In other words, you got the Lamborghini, just needs the gas tank filled up.
Yeah.
So
because
here's a question.
Our profits will get us there. The goal is to churn those profits fast enough. But when you're growing at a 5 to 10x or higher, you can't turn your profits fast enough for the growth that's occurring. So I do anticipate that being and continuing to be, there's going to be putting capital into more infrastructure-based things like payroll of more team members to fulfill. But at the end of the day, the majority of that money is all about executing on our ability to grow. I don't see it being a problem when we're executing like crazy, getting capital. So I'm very excited about that time frame and those days that are coming where getting as much capital as I need will be easy.
Yeah. So here's a question. So you just said something very interesting. So let's say you basically your turn is roughly, I mean, I don't know what the basically once a month. In other words, if you had 10 million in cash today, if you raised 10 million in cash today, you could turn that into $120 million in revenues, essentially, at 20%.
No, well, yeah, you're talking over a year. Yeah. So if I took 10 million in and I can turn my inventory in 30 to 40 days, I can turn that into roughly a 20% profit margin. So I could turn 10 million into 12 million.
Okay. No, but the turnover. So in other words, if you had 10 million in cash today, in revenue from that, right? At a
annualized? Yeah. I can't turn 10 million into 100 million in 30 days, but yeah, annualized, I can turn that into, over time, because we're growing at a pace where, you need to be able to turn that profit and continue to turn that profit for more and more product, but the growth pace outpaces the churn of the profits, right? As you can just put the math together on. So that's where it's like, you don't want to run out of capital when you have more and more and more opportunities to buy product and to keep moving that product, right? You just got to be careful and manage that.
Yeah. I think the takeaway is this. Is that if you were able to do a raise of, let's say, 10 million a year, right? That could turn into $100 million in revenues over the next 12 months.
Yeah.
Okay, that's the big takeaway. And let's listen, I think most investors, most sophisticated investors probably realize, okay, at some point these guys are going to raise money, and if they do, but here's the deal, if that happens, that's actual real growth, that's actually value add. So you got to look at that. Any type of raise that Wellgistics would do, you got to see it. In other words, what that's going to create in value. So it's actually value add.
Bingo. I think the natural thing is for like the shorts to come in and see that, oh, they're diluting. Let's be an enemy to them. I think most investors are savvy enough to know. And my job is to make sure I help tell that story enough to say that investment is going into massive growth, right? It's not going into just paying back bills or getting rid of some, expense. It's directly associated to growth. And I think our story has been told very well that we've been able to do a lot. I mean, a lot with a little. Everybody can see it's public information that we raised a very, very small amount of money in March 1st. Okay. So the amount that we've been able to do, the amount that we've accomplished, the amount that we've got done and executed on in these last 6 months is unprecedented. What does that mean for what we would do into the future with more capital and with the ability to really kind of build it our way, the way that we know we can build it?
Yeah. And I think, listen, raising 10 million, I think, is not a big deal. By the way, Brian, again, we're going to get, you're giving me opportunities to plug the book, the 10-bagger blueprint, because you're living the 10-bagger blueprint, essentially. And I have a chapter in there. One of the things that investors are always afraid about is, oh my God, dilution. And we talk about dilution. If the money you're raising is actually going to create a massive increase in revenues, which then drives the valuation further, that's not dilution. That's actually value add. Dilution is only when a stock is going down and the company needs money to basically stay in business. This is not survival capital. This is like literally, it's basically like, I think if there was an announcement that came out of, hey, we're raising 5 million, 10 million, let's say 10 million, we're raising 10 million. I think that should be a signal to the market that is the inflection point. I mean, that's actually, I'm taking a contrarian approach. If you put out a news release saying 10 million or raising 10 million, that means that this company is going to hit 100 million revenue based on everything you said. You already have the infrastructure, the model, everything is there. You got the lamp, you got the F1, you got the Formula One, you got the who's the guy who's the Formula One? I don't know. Who's the world champ? Who's the guy that Formula One champion? I don't know. Whatever. Not Mike. Who's the guy? Whatever. Anyway, you got whatever it is. The what's that? Somebody's going to mention his name. Who's the guy? Brad Pitt. Okay, you got Brad Pitt. You got.
I'm just saying because of the recent movie. That's all. I'm just.
Yeah, you got the bear. Yeah. So okay, so you got Brad. You got the Formula One car. You got Brad Pitt sitting in the driver's seat, and all you need now is the little fuel. You got the little fuel. We're gonna put the fuel in. This thing is gonna hit 200 miles an hour and go. Take the prize for the winner's circle. So it's actually I think it will be a major positive. Okay, Brian, listen, I want to respect your time. Let's wrap up here. Very exciting to learn about the growth story. So bottom line is I want to ask you in a nutshell, I always like to ask CEOs this question. In your opinion, what are the top 3 reasons in a nutshell why investors should consider the stock today? Like just the way you see it.
Sure. Well, without sounding like a broken record, we're at a transformational inflection point right now in America, and prescription drugs are at an all-time high, and we offer the solution to lowering the cost and delivering them in a better way. And so, if you're looking at why invest, because we're at a pivotal point in America, and we're at a pivotal point as a company to be able to service this moment in time, right? So, as you've mentioned, the stock is down. I think that's very much to the advantage of new investors coming in. It's an opportunity to help lift us up and to be part of this near $1 trillion market that has unlimited opportunities within our 3 major divisions. Okay. Distribution, tech and hub services, and pharmacy fulfillment direct to consumer is truly one of the first full ecosystems for vertical integration to take the drug from the beginning to the end, from the maker to the taker. So for me, again, pharma traditionally has a lot of opportunity. It has a lot of growth. It has a lot of, there's a lot of sexiness around pharma stocks. You're not investing in a biologics drug that has phase 1 completion, and you still got to get to phase 3, which might be 3 years from now, and then they still have to commercialize the drug. A lot of pharma is that's what a lot of people invest in. Small boutique pharma companies with 4 or 5 molecules. What you're investing in with us is the delivery mechanism of when that drug gets through its clinical trial and it's ready to go to market.
Powered by AI.
It's powered by, our AI systems. We have 3 major AI tech components. We're going to be talking a lot more about those, both in media, live streams, press releases. Those are coming. Our tech infrastructure is what makes it possible. But then our physical infrastructure is what drives to A to B, right? We are the rails of the prescription movement, but we're also the non-physical service, drug routing, working with pharmacies and physicians to make sure the drug is properly moved through in a more efficient way. So those are the major components of why investing in us makes a lot of sense. Number one, we're not a $40 stock, we're at an affordable entry point for a lot of people. I very, very much want people to see our long-term vision. Don't get caught up in any of the short-term stuff, whether it's, Trump and policies and different things, but focus on the fact that we are in a transformational state of the economy of the nation where pricing does need to come down. The question just becomes how, right? Everybody's asking, how do you get pricing down? Okay. One way is they can go to other countries and raise the prices in other countries, right? That's because the favored nations clause says you have to compete with other countries. Well, that's one thing they can do. The other way is to actually kick out all the bad guys that burden the system and go direct. And that's us. We are that. So bet on us in our future that we will be able to fulfill this incredible demand market that is much, much needed today, beyond any other market I've watched and seen. I mean, aside from maybe AI, that all of its growth and all of its incredible opportunities, we're right there. And we are healthcare AI tied to the prescription drug movement, right? These two align very, very well for us. And I can explain that. It's probably another hour to walk through all of our AI technology. But into the future, I'm sure on future webcast, we'll talk about it quite a bit more.
Yeah. I think what we're going to do is, I think over the next couple of live streams, we'll bring on other members of your team. We'll talk about kind of the operational, financial, all that stuff. One thing I want to, because we have a couple of questions. There is actually a crypto angle to the company. You're using XRP for payment thing, which you're developing. Can you address? We have some questions. Can you address that? Like what is the XRP story with WGRX? Because we do have people.
Yeah, no, it's great. Look, for me, I've always been a big crypto guy. I've always been a big fan of it. I'm more of a fan of the utility of blockchain. And I do not invest in crypto unless I understand its blockchain utility side of it. I'm not a meme coin guy. I'm not a hype coin guy. I'm very much like very, very traditional. And so I've been bullish on XRP for a long time. I'm really impressed with what Garlinghouse and Ripple Labs has been doing. I know they've gone through a lot of pain, and anytime you go through that much pain, it means you're onto something, with the government. But at the end of the day, XRP is in my opinion, okay, this is my opinion. I believe that XRP is the future for all things financial rails. It's all things moving money because it's faster, tremendously faster, a fraction of a second. I can send Jack Marks XRP in a second, and it's going to cost me a fraction of a penny. I can send you XRP for a fraction of a penny and a fraction of a second, right? So think about that as you think about what the total cost on healthcare in the U.S. is annually. That total cost on healthcare in the U.S. annually for just payment cost. Okay, so we're talking merchant fees, wire fees, ACH fees, any fees charged for traditional banking payments is upwards of $250 million. No, I'm sorry, $250 billion. It's in the billion. Wow. $250 billion a year.
That's just a payment. That's just a payment.
Fees. Yes.
That's just basically the cost to get your money is 250.
Correct. It's
billion with a B.
So as we looked at this, pharmacies, every percentage of profit counts at a pharmacy. Okay, independent, local, mom and pop community pharmacies, they generally will have to pay for merchant fees, right? So anytime they're taking a credit card, they're either eating the fee or they're maybe trying to charge it to the customer, which is kind of a no-no. They have to also pay for product, right? And generally paying for product, it's done via their credit card, it's done via wire transfers, or it's done via some sort of ACH pull, okay? All of those have associated fees to them. Let's just call that 2, 3, 4 points annualized. You're talking anywhere from $50,000 to $100,000 a year for a pharmacy. I mean, this is a matter of like a full tech or a pharmacist in charge. This is like a salary almost to one of your top employees. This is a difference whether or not the owner of the pharmacy, does a lot of things, takes a vacation, does a lot of things. So what we looked into is that how hard would it be to be able to work with our independent pharmacies and for us to accept XRP from them? Well, we got into all the weeds and there's a lot of onboarding process to this. There's a lot of compliance process to this. And it is very much possible. But in the end, being able to accept their ability to pay us in XRP means they eliminate all of their costs associated to at least paying us as their wholesaler. Okay. So with thousands of pharmacies that we service across the US, that could be a very meaningful thing for pharmacies that choose to engage and choose to pilot this and work with us on this and go through this with us. And that really boils down to how do they pay with it and how do we accept it? And the nice thing about it is there's now an ability to very quickly transfer. So if I have dollars, I can transfer them to XRP and I can send that. And if we receive it, we can receive it and either hold that XRP or we can transfer back over to USD, US dollars. Okay. So that that process is rather simple now. The other side of this is Ripple Labs just came out with what's called the RLUSD, which is Ripple Labs USD, which is, it's the equivalent of $1, but it's on the rail system of Ripple Labs. So now I can deliver that exact same dollar for less than a penny at less than a second to my supplier, and everybody receives it effectively in a, yes, it's a crypto digital coin for Ripple Labs, but it's the same as the dollar. I can convert it at any point. I don't have to worry about whether XRP is going to maybe go down or up as I'm sending the money. So these are all things that we believe in. I will forever be building this and working on this within healthcare and moving to every level possible for the payment system to take place using a smarter, better financial rails platform than what is in place in traditional banking today. And by the way, this is happening across the world with institutions. Everybody's eyeballing, can we save money by implementing this type of program into our company? And so we decided.
I think the takeaway, yeah, Brian, I think that the takeaway is that, this, you're embracing or going with XRP, as a utility for, again, lowering the costs. Again, everything you're doing is to get a competitive advantage in the market.
Yeah.
To lower those costs, and this is totally, it's completely aligned. This is not like, I know sometimes, there's a lot of companies, there's a lot of in the microcap space, oh yeah, we're doing crypto, the blah, blah, blah. This is actually a legitimate use case. This is it's completely aligned with everything, and this is like basically where the future is going. Because the margins are the margins are everything. A couple of percent, it makes, as you point out, it makes a huge difference. So it's, and again, so you got the XRP, the crypto. So you're really, again, I would call this a next generation farmer distribution company, which fits. You got the AI, the tech stack, the crypto, everything is there, and you have the revenues to prove it. And now it's ready to just scale. Okay. On that note, Brian, I want to thank you for joining, and we're going to, I look forward to getting some, more, hopefully more news flow coming from the company in the coming weeks. We should have some, or I don't know, are we expecting any type of, what kind of news? I forgot to ask, what kind of news announcements can we expect in the next, I don't know, let's say 4 weeks? What do you have? Do you have anything you can give us a hint as to, or what?
We should have something this week, and then we will have more next week, and we will have more the following week. So we anticipate probably a handful of good press releases over these next couple of weeks. So we're working on it. No promises, but we're pretty confident that we'll have some good news out here in the up and coming weeks.
Okay, excellent. So everything is ready to go. On that note, I want to thank you everybody in our audience for joining, and we'll catch up with you on the next live stream.
Okay, thanks, Jack. Appreciate it.